Hey, Mad Money fans, check the bottom of your screen for an exclusive offer. Next.
If you didn't know any better, you'd think it's one gigantic comic opera. Talk about the FTC's decision to sue the greatest bargain creator of all time, Amazon, for exercising alleged monopoly power, while at the same time the Justice Department is grilling Apple's Eddie Q to learn more about how Google allegedly monopolizes search to the detriment of all of their competitors. In the old days, the regulator's main antitrust standard was how things worked out for the consumer, and both these companies have been fantastic for consumers. We cared about outcomes to the consumer first and foremost. I'm not asking the FTC or the Justice Department to give either company the Congressional Medal of Commerce, but I do think the regulator should think like that again, especially in an era where the consumer is being shredded by inflation, and these two companies are actually trying to do something about it. But Justice and the FTC are going after Google and Amazon like they're Standard Oil, a company that set out to get 100% of the market and then did exactly that. Rockefeller Standard Oil tried to monopolize by any means necessary, and it succeeded. So the government sued to break it up. A good decision, because there was no competition. Standard Oil could charge whoever it wanted. I'm sure Google and Amazon would love to be actual monopolies, and they may have been real tough competitors, but neither of them has that kind of scale. Google has to pay Apple $20 billion a year to be their default search engine. That doesn't sound like it has monopoly power. We are not at Google's mercy because of this deal either. Unlike Standard Oil, the benchmark of monopolistic behavior, Google has the most powerful, wealthiest competitor in the world, Microsoft, and its Bing engine. And Microsoft doesn't need the FTC's protection here, although it's getting it. Bing has lost so far because it's simply not as good as Google. I think Apple would go with Bing if Bing had the better reputation, better program, but even if Microsoft wasn't willing to pay them as much. Eddie Q, who runs Apple's services division, is all about giving users the best possible experience. That's more than the government wants you to have. Why does that seem to matter to Justice? Simple. In the end, they don't want any company to be as big or as powerful as Alphabet or Amazon. Same goes for the FTC, only more so. The head of the FTC, Lena Khan, has had it in for Amazon for years. She even wrote a law review article arguing it should be broken up years ago. I understand their impulse to look at these multi-trillion-dollar companies and decide enough is enough. No business should be that powerful. But they got that big because they're so much better than the competition. No amount of regulatory action can roll that back. Once again, the consumer loves Amazon. That's why the company has tens of millions of Amazon Prime subscribers. There are so many other sites and so much commerce done away from Amazon that it, like Alphabet, may have set out to try to monopolize, but it too can't honestly be called a monopoly. Oh, and to be sure, you don't start a company or grow it by thinking, you know what, I'm going to be number 3 or 4 in order to not be investigated by the U.S. government. Now, let's get one thing straight. The government has it in for any company that's so powerful that it becomes borderline impossible for other businesses to compete. That's the administration's current doctrine. If you're a rich and powerful company, and here I mean very powerful, then this government's going to try to find a way to prosecute you, even if it's bad for the consumer. The consumer doesn't matter as much as the squelch competition. I think that's wrong. But so what if I do? I do not run the Justice Department or the FTC, but this is not mad law school. Sure, over the next few weeks, I'll opine on these cases, both in the merits of the law, but this is mad money. So let me give you what you came here for. Google stock has outperformed the NASDAQ since the government's case began. I think the same thing will happen with Amazon stock, especially because the only real way to cure a company from being so big and powerful is to split into 3 companies: first-party retail, third-party retail, and cloud computing. And if they were to break Amazon up like that, well, it'll be worth a heck of a lot more than it's trading now. D.A. Davidson, no dog in the hunt, says Amazon will be worth almost $200 on a breakup. Stock's at $126. I rest my case. So let me be like Deputy U.S. Marshal Sam Gerard when Dr. Richard Kimball says he didn't kill his wife. I don't care. Forget the motivations. Both stocks are buys. I like to say there's always a bull market somewhere. I promise to find just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow. Last call starts now.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.